Welcome to the Wealth Standing Podcast. This is episode 519. Today is May 6th, 2026. I'm your host, John Pugliano. I'm also the founder and money manager at investmentwealth.com. Today in the co-pilot chair, I have my son, Joe. We're coming to you live via YouTube, and we're going to take some Q&A if anybody shows up and has some questions. In the meantime, Joe, we set this up with a particular question we were going to ask. I guess the way I should say this is Joe and I recently went to Tennessee. And in fact, Joe, can you share that picture we have, the thumbnail? In case you didn't see the thumbnail for this episode, Joe's going to try and share his screen, testing out equipment here to see how we're going to do this in future episodes. So hopefully my microphone's working. But I think Joe's sharing the picture now. So we recently went to Tennessee. Shout out to all our friends at Nicole's Place, Living Free Tennessee. We were expecting a lot of questions about, hey, we're in World War III, and what's going on with markets, and oil's over $100 a barrel, yada yada yada. Joe, what was the number one question we got?
Everyone wanted to know how old I am.
How old you are. So we might get to that in a minute. In the meantime, speaking about pertinent and important questions, I always predict the future. I do have my crystal ball sitting here on the desk. It never seems to work. It's always cloudy. But let's say you could predict the future. Let's say 6 months ago, a year ago, even 5 years ago. Let's say that you would know that today oil was over $100 a barrel, and the Straits of Hormuz, which controls 20% of the global supply of oil, that was going to be shut down, that it was a war zone. And let's say that you knew that interest rates were above 6% for mortgages, and the Fed is still nowhere near their long-awaited rate cuts that we keep hearing about and really have heard about for 2.5 years now. If you knew all that was going to be where we are today, would you have predicted that the markets are where we are, record highs? I mean, it's phenomenal. I think we're totally in a stock picker's market, and to all the people that can predict the future, good for them. But I'm still 100% invested. I don't want to say I'm surprised or amazed every day when the market goes up, but I continue to ride this out, because even though we get the day-to-day declines, I'm a firm believer that we are still in very early innings of this long-term trend. It's not just about AI and data centers. It's about just the expansion that we've seen in onshoring and friendshoring and bringing domestic production back to the United States. This is not a political statement, because it's not about bringing jobs back to America, because a lot of these jobs are being done by automation. The premise of my book that I wrote, almost 10 years ago. But the fact of the matter is that more and more things are either made in the United States or in North America or in friendlier nations, and that continues to bring money into the United States. The dollar is holding up extremely well, and money is literally just flocking into the U.S. equities. So I remain cautiously optimistic. Joe, what do you think?
I tried sharing that picture, and on my screen watching it, it didn't show up. So I don't know why it's not working now when it worked earlier. So
Okay, so we continue to have technical difficulties.
we do.
I'll have to talk to my tech advisor and staff about that. So we won't be showing any screens today. I guess we cannot show stock charts either then, probably?
No, it just went black on my
on your
screen.
end.
That I'm
Okay.
doing.
Well, if anybody's seeing any images besides us, let us know. Before we get to your age, Joe, what about markets? What do you think's going on?
Well, interesting news yesterday about strategy.
Yes.
Is your mailbox full of emails, people saying that you called it right and that they were eventually going to have to sell Bitcoin?
No. Shockingly, no one has told me I was correct on that one. Uh, if you haven't heard, Michael Saylor yesterday, when they announced earnings for Strategy, mentioned that I guess it's the potential that they would have to sell some Bitcoin to cover their dividend payments. I've been saying this all along, and a lot of people have disagreed with me. Um, that there's just no way, given the amount of debt that he's built up, that he isn't going to have to sell Bitcoin at some point if the winter lasts long enough, right? And again, I don't know. I can't predict the future. Um, I think the problem that we've had with anything you say about Strategy or Michael Saylor is that people that believe in Bitcoin want to protect him because they believe in the overall, um, viability of Bitcoin. And I'm not at all saying that Bitcoin's going to zero or that it's a scam, but I'm definitely saying that I have been a longtime critic of Strategy in particular, of what Michael Saylor says. I think, like Elon Musk, he's one of the world's greatest showmen. And my biggest disagreement is that he's using debt. And I feel that way on all topics. I think that the biggest reason financial markets have the meltdowns that we see, whether it's subprime loans or whether it's real estate in China, the biggest problem is debt. People use too much leverage to buy an asset that the asset in and of itself can have total value. When whether it's real estate or Bitcoin or stocks or whatever. But when people get too leveraged, and then there's a problem, and Bitcoin isn't through its winter yet. If it continues to go lower, I think he will have to sell Bitcoin to cover that debt. If he does, that will create a downward spiral, I believe, on Bitcoin. Again, we'll have to wait and see. But the biggest thing is that he has finally admitted that he's not taking Bitcoin to the grave, and there could be a possibility that he would have to sell it. And no one's told me that I was right on that one.
Hmm. Okay. Market's at all-time highs recently. What are you doing with new money?
Yeah, so this is definitely a stock picker's market. And again, I'm holding. I remain cynically and cautiously optimistic. But as of today and for the last week or so, I have not committed any new money to the market. As new money has come in, I've put that into money market funds and I'm holding it. Again, my existing money, my positions, that's virtually 100% invested. But as new money trickles in, I'm holding back. I don't know if this is a little bit too much irrational exuberance. I do believe that people were way too pessimistic on the war in Iran, and now maybe they're a little too optimistic. Although, having said that, look at earnings, and I always say, don't listen to what people say. Look at the actual scoreboard. Earnings are coming in phenomenally strong, and more importantly, if you take out Nvidia and you look at just the Mag 6, they are underperforming in earnings. There is still earning, 6-7%, but the other 493 stocks in the S&P 500 are a double-digit growth, and they are out earning the Mag 6. So I think that's incredibly good news, and we'll see how much of it's already priced in. But the old adage, sell in May and go away. We'll see. I might take some money off the table. But again, volatility, Joe. What was our market isn't closed yet? But what are our worst positions today? Because something you have to consider. I tell people don't look at their balances every day because things can drastically go up or down for virtually no reason. I own over 140 stocks, and so it is not unusual for a couple to be down 10% and a couple to be up 10% on any given day. It's just the way it is. Where are we sitting today, Joe?
So start with the four worst.
Let's do the four worst.
The worst today is Celanese.
Yep, a specialty chemical company has been in a long-term downward decline. I literally thought 2 years ago it was going to pull out of the death spiral. That has not happened yet. What's it at today?
It's down 9%.
Down 9%. And it has been improving as there's been turmoil in the Middle East. That makes American-made commodities have more pricing power, and so it has done well up until, I guess, they announced earnings this week and down 9%. What else?
Next is Devon Energy, down 8%.
Devon, and I love Devon Energy. I've owned it on and off for decades. I think it's one of the best unknown oil companies in the world. They're obviously down just because, you know, oil's fluctuating so much.
Yep. Valero,
Another energy company, Valero, big gas refiner. How much are they down?
7%.
7%. In the long run, they've been up quite a bit lately because you've obviously seen gas prices, and you know, their profits have been and will be strong.
And then last one we'll cover for the worst is Lumentum.
Lumentum. So interesting there. This has been a stellar performer. I got into this way too late. I should have got into it 6 months ago. We recently added it. I forget how much we're up, but it's been up substantially. The other interesting thing on that is their competitor is not down today, right? Who's
Right, Coherent. So Lumentum is down 7%.
okay?
Coherent is up 2%.
2%. And oftentimes you'll see in a particular sector where everybody's down. Like, you know, Devon Energy is down today. I assume ExxonMobil, Chevron, they're probably all down today. Interesting to see that Coherent is actually up when the other one's down. So, by the way, I think that trade, those guys deal in components for fiber optics, and I think that still has a lot of legs to run. What about up? What's up today?
Okay, so we'll increase as we
Okay, so our
go
best
through these.
performers starting on the least of the top four?
Yep, top four again.
Okay. What do we got?
So first one is Centrus.
Centrus, this is a uranium refining company, really has started out the year badly. I think they've probably bottomed and maybe moving upward, but what they do today?
Up over 10%.
Up
today.
over 10. Excellent. And they just announced earnings, I think, last night. So good move for them. They literally can move 3 to 4 to 5% every day, either up or down. And that's a huge holding for us, not because we invested in it so much, but because it's grown exponentially over the last couple of years.
Yep. Next would be Corning.
Corning, 170, 180-year-old company, which now specializes in touchscreen glasses, touchscreen surfaces. Been phenomenal all year long, and really for the last couple of years. How much are they up today?
Up over 14% today.
14% in one day.
Yep.
What else?
AMD.
AMD, Advanced Micro Devices, obviously semiconductor manufacturer.
Up over 17% today.
17% today. I would say that the circular investing in AI trade is still not over if AMD is up that much after earnings. And by the way, I mentioned this, maybe it was in a client note, maybe I didn't say it publicly, or I could have even said in the most recent podcast. Coming through this Iran war, a lot of people have been betting on commodities, investing in oil or gold or other things, thinking that that would rise because of inflation. With the war in Iran, a lot of disruptions to things like fertilizer. So people are piling into those kind of trades. But really the number one sector trade over the last month, and I think year to date, is semiconductors up. I quoted the number the other day, I forget, some crazy, like up 40% or something year to date. AMD obviously still moving up today. Are we down to our top one?
Top one.
Top performer today.
Top four today is Flex.
Flex, these guys make everything from Fluke meters, which are top of the line electronic meters, to servicing AI data centers, to all the nuts and bolts and components that are associated with the electrification trade. How much are they up today?
35%.
35%. They've been a phenomenal performer. They're going to spin off one of their divisions, and so obviously Wall Street must like the news. But 35% in one day. I mean, this is definitely a stock picker's market. I've never really been a huge proponent of just passive investing, just buying in indexed ETFs. But these markets would definitely show you that if you pick the right stocks, really the sky's the limit. And as I mentioned before, and it took me a long time to learn this as an investor, your losses are limited, your gains are infinite. So today, our worst position down how much?
9%.
9%. So we're definitely losing money on Celanese, 9%, but we're up 35% in Flex. So you manage your wealth over the years by pruning your garden, right? Just like you would do a garden or a flower bed, right? You pull out the weeds, you harvest your underperformers, you take some profits when you do harvest your fruits and things, but at the end of the day, you allow your most strongest fruits or trees or flowers or whatever to continue to grow, and that's what you nourish. It's no different with your portfolio. You hold on to the winners, you dump the losers. Anybody in the chat room today? We have no one in the chat room, so not going to get many questions from that. Joe, let's get back to the critical question. Everybody wants to know, how old are you?
Yeah, so like you mentioned, in Tennessee, there are two things that people talked about. One, how similar we look, which
Yeah, we didn't think we did, but
yeah, and I hadn't heard that before. But I guess we look very similar. And then the other was how old I am. So um, I'm 32 years old as of this year, right in January. I turned 32, and yeah, people were surprised to hear I have 4 children. So in the thumbnail of this video, in the picture I tried to show earlier, that's my youngest in that
and he
picture.
is how old?
He's 2 years old.
2, and your oldest is
7.
7, and she's in first grade.
First
Right?
grade. Yep.
So, and you, prior to working with me, you have what, 8 years experience in startup
Yep.
fintech type companies.
Yeah. So I went to University of Utah, got a computer science degree there, and then went to a small startup while I was still in school, and writing was on the wall that it wasn't going to go very far. So I went to a little bit of a bigger startup that was just right across the street from where I was working, and yeah, from there just went to a couple different other companies, and then I left corporate America to come join the old man.
There you go. And I'm sure your father pays you well.
Not as much as I was making before, but
Sacrifices, my son.
yeah,
Sacrifices. Someday, maybe you'll be an owner.
we'll get there one day.
Maybe. We'll see. So you're millennial, Joe. You're not broke.
No,
You're gainfully employed. You think you have a bright future. Oh, student loan debt. How much student loan debt do you have?
I don't have any.
None. You never did, right?
No.
Okay, so you don't have any student loan debt. You're married. Well, you said you got 4 kids. I'm assuming you're married.
Yep.
Okay,
I'm married.
you are married.
10 years.
You've been married for 10 years.
Yeah.
Wow. I didn't even realize that. You've been married for 10 years.
Yeah.
Wow. How does she put up with you?
Uh, she's a peach.
Well played, Joe. Well played. So you're married for 10 years. You're not broke. You have 4 kids. You have no student loan debt. You're not a Scrooge like your old dad. You do spend money because you just went out and bought like an $80,000 diesel pickup truck.
Yep.
So you do spend your money. How are you so different than the typical millennial? Well, you're obviously different. I guess the question is why.
I was raised this way, right? I mean, growing up, you and mom never really got into debt as far as I could see. As a kid, we always lived within our means. I mean, we did things, right? A lot of people also ask in Tennessee, "Oh, did your dad not do anything with you when you were a kid?" And like, well, no. We had Six Flags season passes that we always used.
Mhm.
We all played sports, and
Yeah, some people on a traveling, very expensive team that always wore brand. Joe would never wear anything but Under Armour when he was a little kid, and even if he only owned one Under Armour shirt, he would wear it every day.
yeah,
Where his sister, I could buy her Walmart knockoffs, and she was just fine. But Joe wouldn't do that. But yeah,
yeah.
you played on a pretty expensive soccer team at some points. So
Yeah.
we spent money, we just didn't waste it.
Right. Yeah. Always live below your means. And so I don't know, I guess it was just ingrained in my brain from a young age, and I've always done it. Um, Worked through college. Well, starting at I think age 11, I was refereeing soccer.
Refereeing soccer and picking up big games, you would referee constantly during the weekends and
Yeah.
maybe even some weekday games and made quite a bit of money refereeing.
Yeah. Yeah.
And
So
you took that job very seriously. I remember that. That was kind of funny.
yeah.
He was a stickler for the rules.
I didn't like when the ref wasn't a stickler in my games. So
Yeah. So it's a lifestyle, huh? It's a holistic lifestyle.
yeah. Yeah.
You've got the earning down pat. You're you're a pretty disciplined saver, and now you're being mentored to learn the investing part.
Yep.
Excellent.
Got to do all three.
All three. I hear from a lot of clients as they hit some excellent milestones in their savings. People with the firm, and I always tell them, yeah, I have the easy job. I invest their money. They've got to earn it and save it. If you don't earn and save, I can't help you. Right. So my clients do the hard work. I get to do the easy part, which is the investing. No questions from the chat room.
Someone just asked, "Is the chat not working?"
That could be. Maybe that's why we're not seeing our chats, not seeing the questions.
I don't know.
Did we have any other ones that came in early?
No, we went through those already.
Okay.
Yeah, I just see that one chat. So it seems to be working.
Okay. So we will end it today then. And we'll try and, I don't have, as far as these episodes, these live Q&As, I know if you do them on a particular day at a particular time, it's a consistent thing and you build a better audience that way. Hey, the Wealthsteading podcast has never been about regularity or building an audience, right? Whenever I have time, I create content. My day job, Joe's day job, is to manage money. And as these opportunities come available, we'll try and publicize them as best as we can. But other than that, we appreciate you guys in the listening audience. You can always feel free to send in questions if we can answer them either in an email or in an episode like this. We'll do our best to do it. Otherwise, hey, until then, as always, best returns.